Hello everyone, great to have your company here on Kalkine TV. I'm Rachel and you're watching The Buzzing Trends. Today we're looking at ASX fintech shares worth looking at this month. The last couple of years have seen impressive growth for the Australian fintech industry, with the COVID-19 pandemic only increasing the rate of adoption of digital payment platforms. With the growing popularity of these digital platforms, there has been concern and an increase from regulators about how the implications of buy now, pay later options and the accumulation of consumers' debt. For 2022, we could see much more from the fintech industry, with regulatory changes to increase competition and the use of AI-based offerings. So with this backdrop, let us take a look at a few fintech shares on the ASX. First up, sezzle. They're a fintech company that offers interest-free installation plans at online stores and select in-store locations in a bid to increase consumers' buying power. It's a publicly traded financial technology company headquartered in Minneapolis in the US and operating in the US and Canada. The company witnessed growth for both online and in-store during November, when its underlying merchant sales rose 83% year-on-year to an annualized run rate of $2.5 billion. The strong performance was typically evident on the 4-day period from Black Friday to Cyber Monday, as the underlying merchant sales edged up 53% year-on-year in the US and Canada. Now, last month, sezzle announced its in-store partnership with brand name footwear retailer RUBINO to offer shoppers interest-free financing just in time for the holiday shopping season. RUBINO selected sezzle as its preferred in-store and online buy now, pay later option in an effort to meet growing demand from an increasingly large segment of the population that prefers to pay over time without incurring interest-bearing debt or fees. Now, before we do look at some other stocks, let's take a very small break here. I'll be back soon.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back, Rachel here, and we're looking at ASX fintech shares. While 2021 saw a decline in the Afterpay share price, that was amidst increasing scrutiny of regulators on the BNPL space. The company has managed to see impeccable growth since the COVID-19 outbreak. They operate in Australia, the United Kingdom, Canada, the US and New Zealand. And Afterpay recently received shareholder support for its $29 billion buyout by Block, formerly known as Square. The closing of the deal with the Silicon Valley player could bring some exciting disruptive trends in the Australian financial settings. The company believes that the joint entity would aid in advancing a shared mission of financial inclusion and economic empowerment. The scheme of arrangement has been approved by the Supreme Court of New South Wales. And last week, the Afterpay share price dropped as interest rate worries were sending share prices lower globally. According to various media reports, the US Federal Reserve, widely seen as the most important central bank in the world, has indicated that a stronger economy and higher inflation could lead to earlier and faster interest rate increases than previously expected. Now, higher interest rates would be a problem for Afterpay. It doesn't exactly have a huge margin, and an increase in the interest rate could see a narrowing of the Afterpay profitability. Now, moving to the last stock. Leading global financial services company Zip offers point-of-sale credit and digital payment services in 13 markets around the world. It was previously known as Zip Money. The company was founded back in 2013 and is headquartered in Sydney. Back in 2020, Zip acquired the US-based buy now, pay later company QuadPay to grow its American footprint. The company reported strong performance in November 2021, achieving a record monthly transaction volume of $906.5 million, up 52% year on year. The tremendous growth was also the result of many markets processing buy now, pay later payments for the first time. Via its exclusive agreement with Singtel, Zip is eyeing support for the upcoming launch in Singapore and leveraging the Singtel Dash app. Well, that's all for now, but we'll be back soon with our Buzzing Trends show to share the latest market insights with you. Till then, stay tuned to Kalkine TV for more stock, business and economy-related hot trends. I'm Rachel, signing off for Kalkine.